This is the Asia Trade. I'm Shery in Tokyo. The top stories this hour. Asian traders bracing for further volatility as concerns over the AI frenzy engulf global stocks. Treasuries gaining in a rush for havens. SpaceX raises $25 billion in its debut bond offer, but sources say it paid a significant premium over treasuries to get the deal done.
And I'm Stephen Engel at the World Economic Forum Summer Davos in Dalian, China, where Chinese Premier Li Qiang delivers his keynote speech here in just a few hours' time. But before that, we'll talk about private equity in China with Bain's Greater China chairman, plus more on the impact of AI. We'll talk with the CEO of life sciences firm Agilent.
And I'm Haidi Stroud-Watts in Sydney. Take a look at the setup for trading across Asia, looking like another challenging session for Asian stocks, particularly in that AI chip space, as we see that significant sell-off, the Wall Street-led tech-driven sell-off, deepening these concerns that the artificial intelligence-driven equity rally has run too fast, too far. There's risk-off mood really driving investors into safer assets. Shery mentioned the move in treasuries, also haven moves when it comes to the yen and the Swiss franc. We'll talk a little bit more about the yen and these sort of suspected intervention moves after we had those high-level conversations with the Treasury Secretary. But take a look at how we're setting up as we have Kospi futures off by just about 1%. This as we had that enormous plunge in that Tuesday session following what has been a pretty significant period of volatility and wild momentum swings for Korean stocks. But we are watching the chip stocks in particular today again. Switching out the board when it comes to the commodity story, oil at this point holding on to that drop. New York traded oil off by about 0.3%. They were seeing more tankers openly crossing the Strait of Hormuz. The US and Iran continuing on trying to make progress towards permanently ending this conflict. Both sides have flagged early progress in these talks, but further talks likely to be quite protracted. We've, of course, started to hearing the different claims of the level of progress in as well. Perhaps bucking the trend will be the start of trading here in Sydney. We're seeing Sydney futures actually showing upside of about 0.4%, Shery.
And of course, we had the downside pressure in the overnight session. So let's get more on that global market rout, which one Wall Street strategist called a chip wreck. Our markets reporter Anthony Stevens joins us for more on this. That caught your eye too, right? It did for me as well. But really, it was a bad day for global markets. Of course, we started in Korea, and it's looking ugly for Micron ahead of earnings.
Yeah, it's not really that funny when you see a move of 8 to 10% on the downside of, most of the U.S. chip makers. So what happened yesterday was a follow-through from the Korean sell-off into the U.S. sell-off. And a lot of European and U.S. traders picked up on headlines in the Asian session from Korean domestic newspapers that Hynix was moving away from making HBM into focusing on the DRAM space. Now, DRAM is a much less complicated form of memory. And there were a lot of questions of why that was happening. Of course, DRAM has rallied a lot, but did that justify this move? And this fundamental shift, rather than a flow shift, kind of sparked a little bit of panic selling in the US. We saw semiconductor names, but were led lower by the memory space. So names like Micron, Western Digital, and so on were up down around 8 to 10%. So that was quite a significant move heading into the Micron earnings, as you mentioned. Now, the implied move for Micron earnings is about 10%. So it possibly have 2 straight days of this kind of move. The downside on U.S. markets may be limited by the fact that economic growth is so diverse in the U.S. So quality names held up really quite well in the U.S. overnight. But since most of emerging market stock gains have been from these Asian chip makers, the concerns are much bigger coming over on our side of trading. For example, you see Taiwan futures significantly lower today, even though they were resilient yesterday.
Let's preview the Asia market opens, because the safe haven bids and that rotation that we saw, whether it's treasury space or the dollar strength that we saw overnight, happening despite the fact that oil, even early in the Asia session, continues to lose ground. It doesn't look great.
Yeah, the EM story does not benefit from any of the safe haven rotation. As you mentioned, the focus is very much on the U.S. And the growth in the U.S. driving the rates market higher on rates in the U.S. and short-term rates. That puts pressure on EM from a rates perspective. We don't really benefit any more from the oil story because that is really well played out. And we are seeing the flow story being very concentrated in Asia in the chip makers. You saw, for example, Hong Kong enter a bear market. So our quality story is really not playing out in quite the same way as the US. We are very focused on the chip makers. And coming into today, you see this flow kind of unwinding. You saw the Korean leveraged ETFs pull back very, very sharply in terms of outflows yesterday on the downturn. That marks a change in behavior from Asian retail. Asian retail normally buys the dip, but yesterday we saw an outflow into the downturn. So that bears watching today whether we see some follow-on unwinding from Korean retail across the markets today.
Yeah, the leverage ETF, those flows now becoming more of a structural issue, right? Not surprising that we got authorities warning about that, or not too happy perhaps in hindsight. And investors in South Korea, so important. But the volatility is incredible right now. So I guess in a way, the MSCI not necessarily upgrading this market into developed markets makes sense.
Yeah, the MSCI upgrade, will take some technical doing. Korea's FX is still firmly in the emerging market world. The government intervenes quite significantly. Short selling in Korea is quite a convoluted process from an operational perspective. So these are operational changes. But coming into today, that's probably a relief for DM investors. In Korea, we continue to see these leveraged ETFs press at the boundaries of the market microstructure. They need to keep adding new instruments to mirror this performance. And that is, as you mentioned, exacerbating the intraday volatility you see in Korea. Your intraday volatility is very high and close-on-close volatility is very high. So this is quite a dangerous environment in which to trade leverage ETFs, let alone leverage ETFs that are increasingly drifting away from their underlying tracking.
Bloomberg markets reporter Anthony Stevens there with the latest. And one stock we're focusing on, SpaceX, of course, shares have snapped that three-day losing streak after shedding more than $600 billion in market value. The rebound coming as the company made its bond market debut, raising $25 billion across 5 tranches. But sources telling Bloomberg that it paid a steep premium over treasuries to get that deal done. Let's bring Bloomberg markets correspondents Nora and Melinda for more. So, Nora, we've seen credit agencies, we've seen equity investors taking one view of SpaceX, but debt investors seem to have quite a different view.
That's what we're seeing. Of course, we do see credit firms seeing this as firmly a high-grade, investment-grade company here. But you are seeing a bit of a difference when you look at the actual bond traders and how they're digesting this. They seem to be a bit more cautious and more skeptical. Now, we do know that this is a bond sale that did see high demand, but most of that high demand coming in for the least risky and shortest dated bonds here. So we did see about $90 billion worth of orders pouring in for this debt sale. But I mean, after we saw it at the end, it came in about $73 billion worth of orders. Now, this is below average in terms of what we've seen this year for other companies that are doing bond sales in the high grade market.
Are there any cash flow concerns at all?
Absolutely. That's another concern that investors have here on the table, especially given the fact that expectations for SpaceX are that the company is expected to burn cash well through 2030. So there's still this concern underlying about whether or not a company that's not necessarily profitable yet should be taking on this level of debt. And we've really been seeing that scare widespread, ricocheting across all tech companies, these big major tech companies that are pouring a lot of money into any sort of AI build out. So that's also the concern that you're seeing here as it relates to SpaceX here.
Yeah, I mean, they want to get paid for that risk when it comes to the debt holders, right? So what is the spread telling us about how they're pricing the company's risk?
Yes, and that's also something that people are really keeping an eye on here, especially given the fact that we did see that the company paid a significant premium over treasuries for this deal. So as we continue to look at spreads as it relates to the bond market in this particular deal, investors still continue to be cautious here as we look at the company moving forward. We saw a rebound on the day as we look at the equity market, but we have seen the company shed a large amount of its market value over the past 3 days. So we'll have to see how it continues from here and whether or not we're going to see the same level of appetite that we maybe saw at its really spectacular IPO day.
Bloomberg's markets correspondent Nora Melinda there joining us from New York with the latest on SpaceX. Well, still to come, MSCI delaying its review of Indonesia's market status while flagging a possible downgrade if progress falls short. We have details and then an analysis next. This is Bloomberg.
MSCI has again decided to postpone its review of Indonesian equities. The index compiler says it needs more time to see whether recently announced transparency reforms are effective. Adam Farrar is Bloomberg senior Asia-Pacific geoeconomics analyst and joins us from Washington. Adam, where does this decision leave investors looking at the Indonesian market? Because it has been delayed, but at the same time, the threat remains well and alive.
That's exactly right. I think there was a hope that MSCI would see progress from Indonesia, and to some extent they have, and their willingness to delay this further, but it leaves the threat of downgrade from emerging market to frontier status still hanging over the Indonesian market and adding to a general sense of unease about the direction of the Indonesian government and, moreover, markets, which have fared worse than almost everywhere else in Asia. And, currently this downgrade still puts at risk over 13 billion in investment. And the question remains whether these initial steps that the Indonesian government has taken to try and address MSCI's concerns, whether they'll actually be able to follow through to increase transparency, increase the amount of shares that are actually available, and bring Indonesia up to the standard that MSCI is looking for.
Yeah, we have seen the indecision and the decision-making process within the Indonesian government right now actually leading to more criticism, especially when it comes to market or fiscal policy. So what can we feasibly expect to the lead up to the November decision?
So on one hand, I do think we're going to see the Finance Authority try and work to implement these transparency reforms and heed the words from MSCI. But at the same time, the moves from the government as a whole, and particularly President Prabowo, are likely to continue to cause unease across the board. And that's continued efforts to centralize key elements of the economy, including the surprise announcement just recently to put the new sovereign wealth fund, Danantara, at the center of Indonesian commodity exports, including coal and palm oil and even nickel, all of which has really thrown a wrench into investor confidence into a key sector. So on one hand, I do think there are folks in the government trying to implement these things, but at the same time, there are broader pressures on the Indonesian economy. They're going to weigh heavily on the rupiah and continue to raise questions for the market itself.
Bloomberg Economics Senior Geoeconomics Analyst for Asia Pacific, Adam Farrar, they're joining us. And another pressure when it comes to emerging markets, including Indonesia, right? The dollar hitting its highest level since November. Traders firming up their views when it comes to the Fed's path forward towards rate hikes this year. That's as we await the Fed's preferred inflation reading later this week. Garfield Reynolds leads our Markets Live Asia coverage and joins us now. So we saw the big move in treasuries. What's the markets thinking at the moment? Obviously, that inflation gauge reading is going to be impactful in firming up that direction.
Yeah, very much so. Though the big shock that's still playing out across markets is the way that Chairman Walsh leaned into hawkishness so readily. Didn't give any acknowledgement of the idea that he might have come in wanting to lower rates. So he let the FOMC have its fairly hawkish head, which actually reduces the risks for the dollar from the PCE. What's really happened is the dollar has very strongly regained its crown as the haven of choice.
We are actually hearing from the Treasury Secretary, Scott Bessent, talking to the Economic Club of New York at the moment, broadly talking about supply chain security, vulnerability to any foreign choke points. So this as we continue to kind of watch for progress on the geopolitical front there as well, right? The risks are still there to inflation in terms of how well the next, 55 days or something goes, right?
Yeah, very much so. And, we have to remember that, the crude oil futures have come down a lot, but the impact of the supply shock is still feeding through into the global economy, and not just from oil, is also your natural gas, fertilizer, and yes, all of the indicators on these are showing prices coming down, but we've still got significantly higher prices than we had at the beginning of the year, and we've got the clear concern being shown by Fed policymakers and others that they don't want to let people expect that central bankers will let these higher inflation readings feed through and just linger. So they want to stamp out not just inflation itself, but consumers' anticipation of where inflation is going to go.
Bessent also had the conversation with Finance Minister Katayama, and we're on yen intervention watch now.
Oh, very much so. Yeah, the yen has actually stood out. It's the best performer amongst developed currencies against the US dollar over the past 5 days. It's only down 0.6%. So that tells you something, but it's been very stuck. You're close to that 2024 intervention level. You would think it's going to go on doing that unless we do get a sudden resurgence in oil prices because the talks deteriorate, or if we get a couple of markedly more hawkish Fed speakers. But while those Fed hike bets remain in play this week, they've actually stabilized. They haven't moved significantly higher or significantly lower. Same thing goes for Treasury yields after they backed up strongly last week. So as long as it's all quiet on that front, the yen, traders are unlikely to push it hard through that former intervention level because they clearly are concerned the Japanese authorities would act.
Bloomberg's Garfield Reynolds, who leads our Markets Live Asia coverage. More ahead here on the Asia Trade. This is Bloomberg.
Chinese Premier Li Qiang is set to address the World Economic Forum in Dalian, China, with investors watching for any measures to boost sluggish consumer spending. Our chief North Asia correspondent, Stephen Engel, joins us now from the so-called Summer Davos. Steve, I'm a little bit disappointed not being able to be in Davos with you this year, but I remember last year the focus was very much on artificial intelligence with the launch of DeepSeek. What are we expecting today?
Well, sure. AI is at the top of many people's minds here. In fact, I'm moderating two panels, one yesterday, one today. Both is about innovation, domestic innovation and AI. So that kind of tells you of all the panels, two of them that I am moderating are centered on AI. There are others as well. Today, the focus is really going to be on the so-called opening. It's always on day two for some reason. The opening keynote from Premier Li Qiang. And it's going to be a similar type message. Now, again, I don't have an advanced copy of that speech, but I've been covering this Summer Davos every year. It alternates between Tianjin and Dalian every year since 2007, minus a little bit of break because of the pandemic. And the messages are very clear. It's to a foreign business and government audience, largely here at the World Economic Forum. And it's going to be rejecting protectionism. It's going to be rejecting the perceived law of the jungle in trade policies abroad. There might be a few olive branches since the United States and China have sort of reached a détente right now. But again, how lasting of a peace is it? The biggest issue, though, for not only the Chinese policymakers, but also the business leaders from abroad who are coming here is how is China going to continue and add fire to efforts to boost consumption and therefore imports and opening up the economy. Huang, he's a PBOC advisor as well as a Peking University professor. He spoke yesterday, adding more urgency to his frequent calls for more measures to boost consumption. As we saw in May, this economy sputtering even more, especially with consumer spending falling to levels not seen since the pandemic. Investment levels are down as well. So clearly we're going to be looking for any kind of signs that Li Qiang, the premier, agrees with the PBOC advisor Huang Yiping on this matter, that there's more urgency now to boost domestic consumption, rebalance the economy at a time China continues to lean on that old cocktail of exports, which, by the way, is then stoking more trade friction with the European Union, with the United States and other trade partners. So, there's a lot to watch for and parse the words of Li Qiang as he's going to be speaking around the 10 o'clock hour here in Dalian.
Yeah, Stephen, I'm glad you brought up tariffs because it feels like with the Middle East situation kind of, hopefully headed towards a resolution, we're seeing this revival of supply chain concerns, of tariffs, of trade protectionism concerns, right? What are we expecting in terms of the conversations around Beijing's role in that global picture?
Well, obviously, he's going to be, Li Qiang is going to be talking up their partnerships around the world and their supply chain resilience. Look, through the pandemic and through the trade war and through the war in Iran, China has been doubling down on its energy resilience, its dependence on increasing dependence on renewables, and its partnerships as well in the Middle East and through Central Asia. In fact, Li Qiang yesterday meeting with the Kazakh Prime Minister, they agreed to continue their friendship and cooperation. And by the way, also, Li Qiang and the Chinese leadership really emphasizing regional cooperation with, I guess you could call, former adversaries. I wouldn't say South Korea is an adversary per se, but again, there's been some frictions, no doubt, between South Korea and China. But again, the South Korean Prime Minister also here on the sidelines of the World Economic Forum. Those two leaders met. They talked about increased cooperation in AI and technology. We'll have to see where that goes forward on the commercial side, but at least diplomatically, Li Qiang is reaching out his hand here in Dalian.
Chief North Asia correspondent Steve Engel there at the Summer Davos in Dalian. We'll be hearing more from the PBOC advisor Huang later live on Bloomberg TV. You can catch that on Insight. But before that, we'll also be hearing from Bain's Greater China chairman in just a few minutes about the private investment landscape, but more on the impact of AI as well, with the CEO of life sciences firm Agilent later on the Asia trade. In the meantime, let's get you caught up with some of the top global headlines that we're following this hour. And the Republican-led US Senate has voted for the first time to end the war with Iran in a rare symbolic rebuke of President Trump. The move signals disapproval of the conflict, though it's unlikely to force any change in the administration's strategy. Its practical impact is also unclear, since Washington and Tehran have already reached an interim peace deal. President Trump has sought to ease concerns about the use of Iran's unfrozen funds, saying they can only be spent on food and medical supplies from the US. But Iran's foreign ministry says Tehran can use the money in whatever way it wants. The two sides continue to make conflicting claims over key issues, including the status of nuclear inspections. Bloomberg's been told that Donald Trump Jr. had a private meeting last November with the Indian billionaire Gautam Adani, while Adani was facing US bribery charges. Last month, the Justice Department moved to drop the charges after Adani agreed to pay $18 million to settle an SEC case. A spokesman for Donald Trump Jr. says he had nothing to do with the DOJ's actions. Shery.
And Heidi, take a look at how we're trading in the currency markets right now, because we had seen in the overnight session the dollar hitting the highest levels of the year. The Fed repricing continues right now. The dollar rising against every G10 currency. The BP-Dixie reaching its highest level since November of 2025. On that other side of that trade, you have the euro at that 113 level. We're talking about the lowest levels since June of 2025. We had some weak economic numbers out of Europe. For example, UK activity contracting for a second consecutive month. German private sector activity, French business activity also both contracting in June. So you have this narrative going on that perhaps the ECB needs to stay cautious, especially with the latest coming from President Lagarde's comments that were perceived as dovish. And you have this Fed repricing of a more potentially hawkish Kevin Warsh-led Fed. So you have the dollar strength on the one hand and the Japanese yen also nearing a 40-year low at that 161.91 level, 95 level, which would be the lowest and weakest against the greenback since 1986. We continue to hear authorities here in Japan warn currency traders, but still we're holding at that mid 161 level. This is Bloomberg. Huge pushback against the tech sector, Heidi. We had seen, of course, that sell-off that started with Korean chip makers, which spread towards a global repricing of AI valuations, of that AI enthusiasm that we've seen, of course, for months now. We had, of course, the Philadelphia Semiconductor Index losing almost 8%, as you can see there in the overnight session. All 30 members of the index were down. Micron was one of them, down more than 10%. This ahead of earnings just Wednesday. Micron has been the best performing stock within the Philadelphia Semiconductor Index after that 300% rally. But right now we're seeing whether AI valuations have run too far, those concerns really crowding investors' minds. Hyperscalers getting that pushback. They, of course, have a lot of borrowing into these AI investments. We have seen, of course, some say that they could even become the new software stocks, Haidi, with that aversion to some of these names at the moment.
Yeah, and I think the SpaceX story was also an interesting one, right? Just that divergence between what equity investors, that huge retail component as well, how they feel about the company versus obviously the naturally the high level of skepticism that we're seeing from the bond markets and debt investors. So I think that probably casts a little bit of concern over as well in terms of just another aspect of this exuberant AI tech related story. But Shery, if you take a look at the setup as we head into half an hour away from the start of open trading here across major markets, we are seeing that reluctance when it comes to tech in particular. Oil continues to be a story, holding on to most of those losses as we see more vessels traversing through the Strait of Hormuz, but still a lot of conflict in terms of what we're hearing from the US versus Iran about how these talks are going, who is getting the upper hand, how these unfrozen funds are going to be used, for example, with both sides saying different things at this point. But still, watching the equities open, that's the picture for the Nikkei 225. We're expecting perhaps more turbulence for Korean stocks after that big plunge on Tuesday, the circuit breaker, and then when the sidecar was lifted, we continue to see that volatility. So really watching to see what this next leg of the Korean rally, which has run so fast and so fast, I should say, what that holds next. S&P futures at the moment, Shery, also looking to the downside.
Right, Haidi, and the World Economic Forum's annual meeting also taking place. This is, of course, a meeting of the new champions that continues in Dalian, China. Today, business leaders and investors gathered to discuss economic issues and to identify pockets of opportunity for investment amid shifting market conditions. Let's turn to our Chief North Asia correspondent, Stephen Engel, who is at the event with our next guest, Steve.
Yeah, my next guest and I are looking at those numbers overnight and kind of pondering off camera about what it means for private capital and private equity. No better guest than Jonathan Ju, Bain Capital partner and Greater China chairman. Thanks so much. So you're seeing these numbers. Philadelphia Semiconductor Index down 8%, a bit of a correction, maybe not yet could be classified as a popping of the bubble, but how do you read this as far as your investment appetite and risk appetite?
Well, we typically do not respond to short-term volatility, but obviously if it's an indication of a longer-term trend, then becomes an issue of concern. At this point, I think we still look at AI, look at the economic benefits that AI can generate with very, very positively. And so we're still actively looking at opportunities that will, companies and industries that will benefit from the advancement of AI.
So what are you looking at in Greater China in that space? Because you did finally have a sizable exit. I mean, exits have been a problem for private equity over the last few years for various reasons, including, of course, getting capital out of China and exiting. But the Chin Data, what is it, Wintrix DC Group, right? You did exit in January. What does that tell you about how you will continue to invest in data centers and AI?
Yeah, the way we look at things is typically when we make an investment, we have a thesis. We feel that there are things that we can do to add value to businesses over the, I would say, medium to long term. But once we've accomplished that, we typically then would seek ways to exit, to return capital to our shareholders, to our LPs. Now, the way we look at the current environment is that we currently still, despite exiting some of the older investments, we exited our investment in Kyokusha, for example, in Japan. Yep. We exited Chin Data, the China business. We're actually continuing to build the Southeast Asia business and continue to own and build that business. And we're actively looking for other ways to invest in industries, in businesses that benefit from AI advancement.
Is that really the tricky balance right now? Because I think your limited partners want to see some returns. They want those exits which have been stalled for a few years, right? So I think you took profit, I guess, on the data center Chin Data in China while you emphasize elsewhere.
Well, we took the reason why we segregated the two parts of the business is actually we focused on China first. The surge in demand happened in China before it happened in Southeast Asia. So during the earlier period of our ownership, we focused our resources primarily on China, and then we saw that actually the China build-out was already at scale, and then Southeast Asia represented a fresher opportunity, so we're building on that. That's a little bit later, so we'll hold on to the Southeast Asia business for a bit longer.
What does the private equity industry and you yourself look for signals from the Chinese government as the emphasis really has moved to rebalance the economy? Again, property is a big part of that as far as confidence in the household. Bain Capital has invested in Chinese property. What's your view on that right now, and what's your overall hope for messaging from the Chinese government?
I think obviously property, given how much of household wealth property ownership represents, is a very, very significant issue. It's not a current income issue. It's a whole wealth issue and confidence issue. I think we've obviously seen a decline in the property sector over multiple years. What I think we're hoping at this point is that the market would at least stabilize. And we're hoping that once that stabilizes, and it can lead to some form of recovery at some point.
How does it stabilize, though?
Well,
policies or what?
I think policies will be important because actually policies had a lot to do with decline. And policies will need to be implemented in order to stabilize and lead to recovery. So I would say that's one. I think the second issue is that the Chinese economy overall, domestically, we need to see some more growth drivers, overall confidence. I think the fact that actually the equity market had recovered somewhat last year is helpful. The continued emergence of innovative businesses. I think we're here at Summer Davos in Dalian looking at a lot of new innovative businesses. I think that is going to be helpful. So I would say it's probably not a magic bullet, but a whole suite of things that will help.
How does Bain Capital in China navigate the U.S.-China tensions that we've seen ramped up? Yes, there's a détente right now, but over the last year it's been difficult. Even before that, it's been difficult as well. So how do you really underwrite your Chinese investments at a time when Li Chang will probably say, we're open for business, we want investment. But again, at the backdrop are those difficulties, which can bubble up and down over the course of a year?
I think that certainly has added to the difficulties to underwrite opportunities, because what we do is we are, as investors, as long-term investors, we're trained to analyze economic data, business trends, but obviously political and geopolitical issues previously were not front of mind. And now, because of the impact these issues can have, they have become front of mind. So oftentimes when we look at industries, when we look at new investment opportunities, we will have explicit discussions, specific discussions on potential geopolitical impact on our investment, on the investment horizon. So that is that makes things more complicated.
As the Greater China Chairman, what are you looking at specifically right now?
I think actually China, if you look at Chinese, we look at areas of strength. We look at places where we believe businesses that we believe will be growthful over the near to medium term. So if you look at it today, I think technology hardware has always been an area of strength. China's electronics industry is very strong. So I think that's an industry, that value chain is an area that we are focused on.
What about Taiwan? Because that's the supply chain of those hardware makers. I was at Computex. Valuations had gone up quite high.
Yeah.
Does that make it a little more risky, or still a long room to go?
I think, again, if you look at the value chain, the valuations at some segments have already gone very high. But there are other segments that actually are still quite reasonable. So I think we're more focused on the more reasonable segments of that overall sector. I think the other sector that we're looking at is renewable energies. I think, again, this is another area where China has done a lot in terms of innovation, in terms of government policy support. So there are a lot of interesting businesses in that area. I think biotech is an area that we're very focused on. I think this is probably a new industry for us over the last 10 years or so. I think China today is one of the global centers of biotech innovation, and I think that's an area of focus for us as well.
Overall for 2026, 2025, you saw overall deal flows for the PE world decline a bit. Exits did come up a bit because of a low base, but again, there's still cautiousness because you have all those, as we talked about earlier, those investments that have been sitting for a long time without any exit strategy. So how do you see deal flow panning out for the rest of this year now that the war in the Middle East has calmed down, that maybe you can be a little bit more your risk appetite might be up a little bit higher?
I think my own expectation is that actually that deal activity will pick up. I think we are seeing
around the world or into China?
Around the world and in China. Yeah. I think the exit situation is improving. I think the IPO market in Hong Kong has been strong last year. It continues to be quite strong. We actually have a couple of investments that are in the IPO pipeline. Right. We have a business that's in the Chinese IPO pipeline. So the fact that actually the IPO market is getting unclogged, if you will, is certainly helpful in terms of exit. So exits will be important, but I think new investment opportunities will also be important. I think the fact that there is a détente makes, I think, at least a near-term outlook a little bit more stable, so a little bit easier to grasp and understand.
So you're pretty bullish on the continued strength of the IPO pipeline in Hong Kong. We had the head of international listings on the HKEX on yesterday. I think the chairman is going to be on of the HKEX on my panel later this morning. Obviously, it's been a very good run for Hong Kong IPOs, but again, there was a bit of a sluggishness as well. There's concern about capital flows across the border. That could impact exits as well in China.
I think certainly. I think obviously the public markets tend to go through fluctuations. I think Hong Kong in particular has seen windows open and shut. And so that is an issue that we're concerned with. But at this point, I think the market looks to be open, and we are looking forward to successful IPOs for our businesses.
It's open right now, so you're not directly impacted in these policy changes to curb capital flows across the border?
No, our businesses actually are not caught up in those.
Okay. Jonathan, thanks so much for your time on Bloomberg Television.
Thank you.
Good luck here at Summer Davos. More coverage here from Dalian, as we've been covering it every year since 2007. Back to you.
Our Chief North Asia correspondent Stephen Angle there at the World Economic Forum in Dalian. Great conversation to kick off the day. And we do have, as Steve said, more coming up from WEF's Summer Davos in Dalian. In the next hour, we take a look at how AI is redefining manufacturing at scale with the life sciences company Agilent, and later conversations with CATL, McKinsey, and an advisor to China's central bank. This is Bloomberg. Let's be caught up with the latest with the corporate front, and Goldman Sachs equities traders are said to be back on track to generate record revenue of more than $5 billion in the second quarter. Sources say the bank's equities unit has been bolstered by a boom in activity in Asia, fueled by a rise in trading and financing related to AI. Goldman stock traders have also benefited from investor fervor around SpaceX's record IPO. Bloomberg's been told that Sony Group raised $1 billion from a bond offering, marking its return to the US market after nearly 3 decades. Our source says the debt's expected to be rated A2 by Moody's and A+ by S&P. A filing says the proceeds will be used for general corporate purposes. Alibaba has sued the US Department of Defense, seeking to be removed from a blacklist that identifies the company as a supporter of the Chinese military. The e-commerce giant argues it was added to the list without substantial evidence, violating due constitutional process. The US this month accused Alibaba, Baidu and BYD and other Chinese companies of aiding the PLA. German industrials giant Siemens is making a push into the AI space, betting that the new technology is moving beyond chatbots and onto the factory floor. CEO Roland Busch told us more about their strategy.
We call it industrial AI. Why? You need a couple of things. Number one is you need a technology stack, and the stack includes hardware and software. Both is super relevant. Number two is domain know-how. We know how to build things. We are on the shop floor. The next one is data. We have a lot of data, our own data shared with our customers and partners. And we have the trust of our customers, because when the AI hits the real world, hallucination is not an option. So you need hardcore results. They should work. So we have all this, and we can bring it now to the real world. And last but not least, we have great partners like NVIDIA, like some others, who are with us in making this transformation for our customers.
I asked you at CES in January, give me a case study, an example, some evidence of AI in a factory anywhere in the world. Fast forward to June, is it real now? Is there a deployment that you can point to? Please.
It's real now. And we can talk about the design phase, the manufacturing phase, and the operation phase when your assets are in the field. But you talked about an example on the shop floor. Actually, we now launched our Eigenengineering agent. What is it? It is an agent which programs an industrial PC for you. So if you have a cutting job on the shop floor, and the cutting is not precise anymore, now an engineer has to go there, reprogram your PLC, and so on. Eigenengineering agent does it for you. You say, I mean, my cutting machine is not working precisely. Eigenengineering agent analyzes the problem, breaks the problem down, looks for all the data, the machines, the job which has to be done, analyzes it, develops a code, runs it, compiles it. If it doesn't work, it compiles it over again, fixes it until you can say, now go, and you push a button, and then PLC is running with the same precision as before. So we are talking about 50% higher productivity, while the quality of your programming is increasing by 80%.
Siemens CEO Roland Busch speaking with Bloomberg Tech co-anchor Ed Ludlow. Take a look at how we're setting up for the Japanese market opens in about 11 minutes time. You're seeing the Japanese yen holding at that mid 161 level. Of course, the 1986 low against the US dollar is 161.95. We're watching the yen very closely for any moves from authorities to intervene in the markets. Already we have seen plenty of verbal commentary coming out from authorities. The finance minister Katayama again emphasizing potential bold action, not to mention that increasingly Japan and the United States are aligned when it comes to FX operations. And you can see Nikkei futures pointing to some downside. We had seen it already fall from record highs, of course, in the overnight session. We had that huge tech sell-off. We will be watching the tech sector very closely. Chip equipment makers, for example, Tokyo Electron and so forth. And of course, another stock that we'll be watching today, given all of the AI trade tech, SoftBank Group, is holding its annual shareholder meeting today with Masayoshi Son's bets on AI in focus, along with questions about capex and leverage risk. Let's bring in Bloomberg intelligence analyst Sharon Chen. Sharon, of course, we have seen SoftBank just continuing to surge, becoming the biggest company here in Japan, topping Toyota even. Given how high their asset values are right now, how much room does this give SoftBank going forward?
Hi, good morning, Shery. Thanks for having me. So I haven't checked as of this morning, but the last time I checked, the company has a loan-to-value ceiling of 25%, and it's significantly below that. I think we're looking at 20% or less and this is based on March figures, but assuming the latest numbers in ARM shares, which have done pretty well even despite the recent sell-off. So I do think SoftBank Group has some headroom for additional investment, but it does seem like the company is taking a more measured approach. You know, we've seen news about potential IPO of some of its businesses like SB Energy and Rose, which are the data center robotics arms, respectively. I think the company is going to try to maintain some buffer so that it can continue to invest.
What are some of the risks around those investments, especially when it comes to commitments, huge commitments around OpenAI, not to mention just execution risk from their battery storage business as well?
So I think this is, I guess, two different areas. The first one is relevant to SoftBank Group in terms of OpenAI. They've invested including pending investments, is $64 billion, and it will be valued at close to $110 billion, which makes up around 20% of, give or take, of their portfolio. So that is obviously a very significant part of it, and we have all heard about OpenAI's large cash burn. Having said that, like I mentioned earlier, their loan to value has improved because ARM shares have been performing well. And so we see some headroom, some buffer to weather potential, risk at OpenAI. Now, the second question there about battery storage is actually more relevant to their Japanese telecom arm, SoftBank Corp. So SoftBank Corp at the beginning of this year already announced that it's going into battery storage in Japan, and it's using a fairly new technology in partnership with a Korean player. It's the zinc halogen technology. So that does come with some execution risk because it's a newer technology.
Bloomberg Intelligence analyst Sharon Chen there with the latest on SoftBank. We'll continue to watch the Japanese markets. We do have the BOJ minutes also coming up. This is Bloomberg. We're getting the Bank of Japan summary of opinions from their June meeting when they hiked the rate to 1%, a 31-year high. BOJ members are saying now that it's right to keep hiking rates according to the economy and prices. One BOJ member saying the financial conditions remain accommodative. Another BOJ board member also saying that the neutral rate is around 2%. We'll continue to watch those inflationary pressures here in Japan, Haidi, as we get Tokyo CPI later in the week as well.
Yeah, and of course, so much of that inflation outlook continues to hinge on what we see with the inflation picture and whether energy prices will continue to trend lower, right? We are hearing Treasury Secretary Scott Bessent there answering questions after a speech he delivered to the Economic Club of New York, talking now about these ongoing Iran-US negotiations, saying we told the Iranians that we want a big deal, that the negotiations will be a process, saying it's better for the world if Iran gets a lower price for its oil, saying they're offering carrots, but there are sticks. Market opens are next. This is Bloomberg.
This is the Asia trade. We're counting down to Asia's major market opens as the AI trade now faces one of its biggest tests in months. Heidi, of course, we saw that Korean chip sell-off sparked here in the Asia session, completely going overseas and then causing this global repricing of expectations around artificial intelligence, around AI valuations, and all of this just ahead of Micron earnings.
Yeah, it does not bode well, does it, for those Micron numbers? And really, it was an extraordinary day that we saw in that Korea sell-off yesterday. And I do wonder what that bodes for today. The SpaceX story probably didn't help very much either when it comes to sentiment. Certainly, bond investors have a fairly different view compared to the exuberance over the AI and the SpaceX story in the equity space.
Yeah, all of that borrowing by hyperscalers, not to mention, of course, the greedy, perhaps was perceived as ambitious AI investments, all feeling the skepticism these days. So we're now seeing right now the Japanese market open to the downside after we already really fell from those record highs this week. The Japanese yen is what we're watching closely in the Japanese markets because we're still very close, a striking distance away from that 1986 low against the US dollar of 161.95. We had a weak 5-year auction, so we're watching the JGB space very closely, as well as we continue to hear from authorities here in Japan trying to talk up the yen, talking about bold action. The latest from Finance Minister Katayama was that the US and Japan were very much aligned when it comes to FX policy. Take a look at South Korea, because that's the market that's going to tell you all this sentiment around tech, especially when it comes to Samsung, SK Hynix, and we're seeing, of course, a little bit more upside after we saw that huge loss in the previous session. Of course, that just went global. We're seeing Samsung Electronics recoup about 4% of those losses. Leverage ETFs, now analysts say, are bringing more volatility to this market. This, of course, as we continue to watch the Korean won, which is now steady at that 1534 level. But of course, Heidi, we have seen immense pressure on the South Korean currency as well.
Yeah, and immense pressure when it comes to broader equity markets, right, which has sort of translated into a bit of a better picture when it comes to US Treasuries. Of course, so much of the story for Treasuries, what we're expecting from these, the Fed's path for the auction was met with demand, despite, of course, what we saw as the rally as well. But we will be watching for that Fed's preferred inflation gauge later on this week, which should give us a better indication as to what that path forward looks like, despite the uncertainty that continues to come from oil prices and the energy positioning that we're seeing with these talks ongoing between the US and Iran. But the picture when it comes to crude, we are seeing crude prices kind of holding on to most losses at this point. WTI holding on to most of those lower losses, those lower prices, and Brent coming online softer by just over 0.5% there. We're seeing more tankers crossing the Strait of Hormuz as these peace talks go on. But that's also despite some conflicting accounts of how these talks are going and what each side is getting out of it, with, of course, both sides really posturing to make it seem like perhaps they're getting the better end of the deal. We heard from Treasury Secretary Scott Bessent talking earlier in New York about the US wanting and telling the Iranians that they want a big deal, that they're using carrots at this point, but the proverbial sticks could come out at some point as well. Aussie stocks also coming online. First couple of minutes of trading, we're seeing upside actually of about 0.3%. Watching for the May CPI numbers due out. That inflation reading could show some cooling despite these still elevated price pressures.
And Heidi, of course, we were talking about the huge sell-off in the overnight session, a little bit of a rebound early in the Asia morning, but it was really about South Korea having a very bad day, essentially, because it wasn't just about that huge 10% sell-off or so. It was also the fact that MSCI decided to keep it in emerging markets. We have, of course, also seen they rejected a formal review process in order for them to be also elevated to DM status. Let's actually discuss all of this and bring Paul Gamble's co-founder and managing partner at MBMG Group. Paul, great to have you with us. It's really Korea that's reflecting sort of the big moves around global stocks, isn't it? Whether it's this exuberance around artificial intelligence or how much volatility this can also cause. Give us, first of all, your takeaway of what happened in the past 24 hours.
Okay, good morning, Shery. Well, I think, Korea got hit with a double whammy punch, basically. It got both things at once. So, both of these have been coming for some time. We've seen that there was obviously a risk. There was a very high risk that the MSCI outcome was going to be that it wouldn't elevate Korea to developed status, and also the Korean market is so tech heavy, and especially with Hynix and stocks like that, it's so exposed to AI and to chip sectors, and they've been in a bubble for so long now that both of these things were unrealized risks, and yesterday they both started to realize at once. So and then I think the question is, how much further can these go? We'll see. We'll obviously see a continued reaction to MSCI in that there is this effect of people who might have been buying in expectation of upgrade now being forced to sell, and also the fact that the door seems to have been slammed pretty firmly shut, and also we face the question as to how long the AI correction is going to go. Is this the start of the big one?
To your point about the bubble in South Korea, tell us a little bit about how frothy this trade is, and in a market that really saw some pride in having a lot of retail investors and activists. What will this do to the market going forward?
Yeah, so I think you have to look at the composition of the market. As I say, so much tech, so much specifically AI-related tech. That's that's great on the upside. It's great to have the investor base that you have when you're in the formative stages of a bubble. And just to be clear, we don't yet know, as I say, that the bubble has burst. This could just be not necessarily the ultimate correction. This could just be a minor correction. Things could get back on track again. But who knows? This could be the start of the big one. And obviously, retail sentiment is very much going to amplify the downside that we see. I mean, there's been an argument for a long time that because of the Korea discount, that the valuations maybe weren't quite as frothy as in the States. But I don't think that's going to be a great deal of comfort if we now see a major downswing in AI stocks. And just to be clear, as I say, we're not convinced that this is the big one, because we still think there is enough liquidity out there globally. And if global sentiment picks up in these kinds of stocks in these sectors, then I think Korean sentiment will as well. So I think we're just going to get some very fraught times when we've got the investor base that we have deciding to turn tail.
Will global sentiment then, in your view, pick up? Given that we have analysts calling this a chip wreck, we have also seen hyperscalers being compared to software stocks. I mean, the borrowing, all of these very ambitious AI investments, will they pay off?
So I think hyperscale. I wouldn't compare hyperscalers to software stocks. I think software stocks are potentially a lot healthier than hyperscalers. And the kind of SaaS route, that seems to have found some sort of a bottom for the time being. But look, I think we've written papers about this. We think the AI bubble is by far the biggest stock market bubble that mankind has ever seen, and both in scale, in scope, in terms of the amount of leverage that's in there, in terms of just the sheer excessive exuberance that's driven valuations up to the level they have. So for us, AI bubble is not the tech wreck of 2000. It's something far, far worse than that, and the broader market impact is going to be worse. But we don't think that markets have actually thrown in the towel yet. I know people are talking about chip wreck, but it's got a lot further to go down before it gets to chip wreck. At some point, we think that's inevitable. Our only question is, has it started to happen, or is this a bit of a false alarm?
In the meantime, are you building some hedging around? We have seen havens recoup a lot of those earlier losses. Treasuries up dollar at the highest levels of the year.
We were heavy on treasuries anyway. We'd actually been moving, more and more out of equities. We'd got very little equity beta. Most of the equity positions we had were long-short positions, and they've continued to do okay, both in Asia and globally. So I think that we're definitely going to see some sort of rotation to value stocks the longer that this continues. The problem is that a lot of what were safe havens aren't really safe anymore. So we were very heavily overweight gold last year, but we've got hardly any gold right now. Haven't had since about the turn of the year, because gold wasn't behaving like gold anymore. It was behaving much more like a tech stock. It was far more correlated to liquidity. Yeah, I mean, we've had a pretty good week, but as I say, the question is this something that's going to carry on from here, or is this, as with the SaaS crisis, is this something that is just an early warning? Because when you get to this level of fragility in stocks, you are very, very susceptible. When you got this level of overvaluation, this amount of bubble, you are very, very susceptible to lots of kind of small corrections before the big one actually hits.
And we have yet to see the PCE, Fed's preferred gauge of inflation numbers this week. That could be another big catalyst. How do you expect the Fed to play into what you're calling the biggest bubble the market has ever seen?
So, I mean, that's a really interesting question, because obviously we have a brand new Fed now, or at least we have a brand new Fed chair. And Kevin Walsh has really tied his colours to two things. One is lower interest rates, although I realise his comments were much more neutral after the first meeting that he chaired. But prior to that, obviously he very much tied his colours to lower interest rates and to constraining the Fed's balance sheet. Well, actually, lower interest rates are really not going to help in this situation at all. They're not going to make any difference if liquidity is drying up and if sentiment is turning tail. So the one thing that the Fed would need to do is to support the market is to carry on producing absolutely egregious amounts of liquidity, as it has been doing for the past few years. I think that's really the thing to watch for. It's the Fed balance sheet is really, in many ways, the key to this. It needs to keep expanding in a way that allows allows credit creation to carry on expanding. The minute that dries up at all, that's really when we know we're in a lot of trouble here. So we watch that very closely.
Paul, do stick around. Of course, we haven't even touched emerging markets at this point, especially when it comes to MSCI and Indonesia. Paul Gamble's co-founder and managing partner at MBMG Group is staying with us. We'll be back. This is Bloomberg.
Take a look at what we're watching across emerging markets, because one of the dominant stories, of course, has been what's going on with Indonesia at the moment. EM markets up by just about 1%. Currency is looking pretty flat at the moment, because so much is really at the whim of what we see going forward as the dollar direction. It has been on the rise with some risk aversion. The euro also hitting a fresh low as well. But let's get some more when it comes to that Indonesia decision for the MSCI to delay the market status review until November. This decision on Indonesian equities being delayed to see if its recently announced transparency reforms prove to be effective by that point. They've said that those moves in the roadmap to raise the minimum free float requirement are a step in the right direction, but consistent implementation and a sustained effect will need to be seen. Indonesia, on its part, the FSA is saying that the local stock market remains attractive and they continue those market reforms after the MSCI notice. Let's bring back Paul Gamble as a co-founder and managing partner at MBMG Group. Paul, great to have you with us, and thanks for sticking around. You say that this is a market whose bubble has burst quite some time ago.
Absolutely. So, the real problem for Indonesia, I remember a while ago talking to Khun Chetticavanich, the former finance minister of Thailand, when he was heading up Thailand's attempts to create a sort of vibrant technology sector, and he was lamenting the fact that Indonesia had been so much more successful at creating unicorns than Thailand had. And I'm a huge fan of Khun. I think he's incredibly intelligent, and for a politician also incredibly scrupulous as well. But this was something we actually disagreed about, because my worry was that in creating so many unicorns, Indonesia was actually creating a sort of private equity bubble that was going to at some stage become a public equity bubble, and that's exactly what happened. We had a lot of the sort of unicorn darlings of that era listed, and pretty much most of them have kind of tanked really badly since then. I think GoCheck has probably been the poster child for that. So what we're seeing now in Indonesia is a post bubble burst era. A lot of those stocks, those consumer discretionary online type stocks have kind of gone a little bit by the wayside. Say they're maybe still 80% down from listing price or something like that. So the index has kind of been handed back to the kind of traditional stewards, as it were, which is the Indonesian banks, and that's okay, but it probably it suggests, as I say, a post-crash type environment, post-crash landscape, where we're not going to, I don't think, see anything massively exciting in the JCI for a while. But that might not be a bad thing. Excitement might not necessarily be a good place to be right now.
Well, it's interesting because I think, you've obviously got the regulator vowing to speed up the reforms after this delay from the MSCI. You obviously need the foreign outflows to ease up a bit. We're setting up for record net outflows at this point for the year. But the economic fundamentals remain pretty good for Indonesia.
Yeah, so growth is still strong. Employment is looking okay. I guess you might have some slight concerns about the amount of credit, but it's no worse than an awful lot of other places. So no, I agree. I think I think it's typical of what happens a lot in Asia. We see it in China as much as anywhere else, that economic fundamentals and stock market behavior can be two very, very different things. And I think it's to the JCI's sort of credit that it's had this burst, and that it doesn't have the kind of hot sectors that are going to attract the hot money that's going to flow out again. I mean, yes, we've seen so many outflows. It's hard to see that can get significantly worse from here. I said this is probably kind of cleaned up Indonesian market now, and I think the economy is in a reasonable position. So, and again, you look at those sectors like the banks that now dominate the index. They do tend to be fairly conservatively run. I mean, they've actually had reasonable credit growth. So, I think at some point, foreign money will start flowing back in, but it'll be a different kind of capital that's looking to buy Indonesian banks than the hot money that was chasing the unicorn listings a few years ago.
Yeah, and I suppose once that hot money kind of starts to disperse from the broader AI and tech trade as well, right? But it does make me wonder if the valuation compression for Indonesia is so historically low at the moment that, do you find an appeal when it comes to the risk-reward scenario now?
I think it's always difficult for an outsider to buy Indonesia because, a lot of what the MSCI are saying is that, this is not yet a kind of a market that always conducts itself the way that it should. And so, we'll always get, until we see the end of stock scandals coming out of Indonesia, market scandals coming out of Indonesia, then, that's really what's going to drive the discount. And, MSCI, this isn't a new comment. MSCI have obviously been going on about this for a while. The fact that they did the delisting that they did a few months ago, that was absolutely draconian. But Indonesia's problems, say they started before then. They started when the bubble burst, and then it seems that since then Indonesia can't catch a break. But as I said, you have to wonder, how much further it can fall. I think some kind of a floor is in at this level. I don't see that there's a massive attraction for foreign buyers to rush back in. I think the kind of buyers that are going to buy, Bank Negara and stocks like that are going to, just tiptoe back in gradually. So I think it'd probably be, a more stable market to be in, but I don't see that it's going to attract, a huge huge influx of bargain hunters.
You talked a little bit about the Fed earlier with Shery, and obviously the direction of the dollar is hugely impactful for EMs. But I do wonder, is there a singular influencer for the EM basket now? Because that used to be China, right? But that correlation has faded a lot.
Yeah, so China now is very, very different to the rest of EM behavior. And I think we've seen this in the last couple of months. The really interesting thing is that Chinese government bonds have become the only really safe global asset. If you look at the volatility that we've had in the last few months, then the one safe haven is Chinese treasuries. So that's a very, very different situation to emerging Asia, particularly Southeast Asia. But again, I think that they've I think a lot of what has happened in Southeast Asia, over the last few years, the markets have really cleaned out. And as I say, they don't have the excitement of a South Korea, for instance, but they will attract a different kind of investor as it becomes clear that these are relatively stable markets. And I know the rupiah has obviously had its traumas, but you look at Thai baht. I was in Bangkok. You look at Thai baht. Thai baht has been a remarkably stable currency the last few years, even in this period of dollar strength. It's been a managed, depreciation of baht against dollar, and in a way that's also potentially accretive to the economy. So I think it's it's almost that what used to be the tigers, what used to be the really exciting growth drivers, have actually sort of grown up and matured, and are probably a little bit less interesting, a little bit exciting for that.
Paul, really great to have you with us. We appreciate your time. Paul Gamble's co-founder and managing partner at MBMG Group. More ahead on the Asia Trade. This is Bloomberg. President Trump says Iran will only be able to use funds released from frozen accounts to purchase food and medical supplies from the US. Michael Heath is here. We're hearing different things, obviously.
Yes, we are, Heidi. I mean, obviously, President Trump says that they'll be buying US farm products, and that this will be the funds will be held in trust, and Iran saying no, that's not the case. That we can spend wherever we want, and the same thing with inspectors as well. That President Trump was like, there's going to be deep inspections and that sort of thing, and Iran again rejecting that. And it's just the old he said kind of thing, and probably there has been some discussion in the talks to do with what Trump is talking about, but certainly there's nothing official that we've seen. So, it is. Look, it is a bit jockeying, and a lot of it's just positioning. It's really hard to know from these public comments who you're supposed to believe.
Yeah, I mean, you're even hearing from Scott Bessent saying, there are carrots at the moment, but we're sort of willing to use sticks. If it's a lot of posturing, isn't it?
It is because you just can't see the US going back to war. We had this vote in the Congress or Senate there, saying that the US shouldn't go, but putting an end to the war and that sort of thing. And obviously, there's no support for it, politically or in the country. And so the sticks, I think, are fairly limited outside of sanctions, reimposing them. And I think they really would rather get a deal.
The domestic pressure is interesting, right? Because essentially, I mean, the vote is meaningful, but it isn't.
Yeah, I mean, it's just it's a prod back at Trump from a party that's been very, very obedient towards him. So it is interesting. Presumably, they're just wanting to be able to say to their constituents that we're not on board with this, etc., that we're not part of it, giving themselves some separation there. But it is unusual. I mean, in recent years, it's sort of he says jump, they say how high kind of thing. So, yeah. Times are changing.
Yeah, we'll continue to wait over the next 57 days or so of this negotiation. Michael Heath there. More ahead on the Asia Trade.
We're seeing a little bit of a rebound early in the Asian session across Asian equities. The Kospi now gaining almost 4% after the loss of more than 10% just in the previous session. We are seeing some of those big chip makers gaining ground, and this is, of course, after all of the volatility that we've seen in this market. It was a bad day for South Korea yesterday. Of course, MSCI deciding to keep it in the emerging market status, not helping that either. The Nikkei is up about 0.2%. We're actually seeing communication services, real estate leading the gains, although energy and materials are down at the moment, and the ASX 200 not doing much. But let's get more now from the World Economic Forum meeting in China, where China correspondent Min Lo is standing by with the man who runs one of the global leaders in life sciences, diagnostics, and applied chemical markets. Min.
Hey Shery, good morning. Yes, joining me here is Padraig McDonnell. He is the president and CEO of Agilent, a life sciences company that sells everything from instruments to services for labs around the world. So thank you for joining us this morning. And since we're in China, I thought we'd start with that. And great conversation with you, by the way, at the panel yesterday. I was looking at your earnings report, and your China business was down about 9% in the second quarter. And yet you're investing in a new innovation lab here. What underpins this confidence for the China business?
Yeah, we have a long history in China. We're here over 40 years. We have a very large business in China, a lot of really good connections with customers over many decades. And in the second quarter, we had a Lunar New Year effect where business moved out. What I would say is the business is really stable, and in fact, some really bright spots in the business. Our biopharma business grew double digit, which is a continuing improvement in the market in life sciences and in biopharma.
And this is coming at a time where China has been pushing for self-sufficiency, and they have been grooming their own crop of Chinese biotech firms and companies that are moving up the value chain to create high-end instruments, right? How big of a threat are these Chinese players to you?
Well, look, we have such a long history. We have a big service organization. We have a long customer connection. And of course, we're investing in an innovation center here in China for reasons that we want to expand our innovation in China. So we believe with our connection with customers and the new innovations we're bringing out, which will only accelerate, we're going to do very well with our customers.
You talked about innovation, and I know that's really key to your products. What do you think is the biggest growth catalyst for your business now?
Yeah, I think if you look at our products, if you think about pharma and biopharma, where they're moving, I think you see QA/QC laboratories. That's a very big business for us, where we're testing drugs and therapeutics globally. Supply chains are being shored up, so a lot of new factories and new capabilities. And in drug discovery, the speed of drug discovery is improving. Of course, AI is really helping that. Sometimes 30 to 70% improvement in clinical trials people expect over the years. And of course, we'll be the beneficiary because our tools create the data for the drug companies, whether it's clinical data or so on, and also on the QA/QC side.
So where are you seeing the biggest opportunities? Where are you prioritizing for your expansion?
Yeah, so really around automation and software and physical AI. That's an area in China that automation is really a strong driver, and that's an area that's a mega trend across pharma. You can see we have R&D hubs around the globe, but China is going to be really based around software and automation. And there's this notion of labs becoming more autonomous or more AI, physical AI ready. And that's where we feel we really want to be at the heart of the innovation here in China to serve our customers.
Your second quarter earnings actually was pretty strong, in fact the strongest in several years. Investors want to know how durable it is.
Yeah, so we had a steady improvement over the last year. I think we had our biggest stock bump over 20 years. So a really strong quarter across all segments. We have a big applied markets business, and within that, a real bright spot was our chemical and advanced materials. So we do a lot of testing for solvents and so on within foundries, within semiconductor, but also batteries. So that's a big growth driver for us. So pharma, chemical and advanced materials, but it was broad-based growth, I would say, from the company.
So you're benefiting from the AI, the data center build out, the foundries business, and then you have biopharma and other growth drivers. Which geographies are you looking at where you're seeing the most opportunities now?
It's actually pretty well broad-based. You see a lot of investment in the US, a lot of growth in China and Asia, and Europe actually has been doing extremely well. We also have an applied markets business where we do food and water testing. People hear every day about forever chemicals. We're the leading tester for forever chemicals and PFAS. And that's an ever-moving business for us, and very strong in China and very strong around the world as regulations improve to keep water and food safe, and actually materials as well for productions.
And has the disruptions from the Iran war, the higher oil prices, has that affected your business in any way?
No, I would say that, over the last 2 years, we've been transforming the company. So we're far more effective at supply chain. We're far more effective through our transformation around how we do our global movement. So we were able to really manage that as we did with other shocks in the system. So we were very pleased with that.
Could you share if you have any acquisitions that you're looking at in the pipeline?
Well, I did two acquisitions. The last one, BioCare, which is really important around antibody in our pathology business. So we're always looking for innovative companies across the globe. And of course, we're very happy with our own innovation programs. We have a lot of programs going on, but we're looking at a lot of companies around applied markets, biopharma, of course. And of course, automation is important for us. So we're looking in that area as well. So more to come on all that.
Are you planning any share buybacks?
We're going to keep that steady. So we're on the anti-dilutive share buybacks at the moment. We're going to keep that pretty steady as we go forward. We have a lot of use for our capital around organic investments, but also maybe some inorganic too.
Let's talk about the innovation in the healthcare space, the diagnostic space. What are some of the latest trends that you're looking out for?
Yeah, well, you see in pharma and biopharma, you see that the speed of clinical trials improving. Therapeutics, we actually have a really strong business in the therapeutic area where we're the #1 supplier of siRNAs to companies. So that's a really important business for us. So what you would say is that the speed of innovation in drug trials is really improving, and having us in there to help that and help productivity in labs is going to be really important to get those outcomes from customers.
And how are you seeing AI transforming the industry, maybe in the next 3 to 5 years?
Well, look, it's going to transform everything. We have a big AI program within the company where we're looking at growth actually in product AI. So people think it's first about cost, but for Agilent, it's about growth, about how we bring physical AI into our products to make our products more, more efficient, etc. And it's just going to create a lot more, I would say, focus on therapeutic acceleration. You're going to see a far more focus on better therapies coming out for customers, etc. And I think it's a really great time to be in this environment with these tools. Now, of course, you have to be very focused on what you're doing with the tools. But I think there are winners and losers with companies are going to be companies that are going to focus on growth and focus on product.
And are you seeing measurable improvements in your investments in AI now?
Well, we just announced a big AI partnerships a few weeks ago, and we're going to continue with that. So we're setting out our stall. But what I will say, we're super excited about it on the top line, what AI can bring. We have a new chief AI officer that we brought in. We have a new COE. And also we're doing a lot of training for the teams inside about how to use AI properly and how do we focus on the key use cases, not to do everything a little bit across the company, but do the most important things.
A big theme I think that we're watching out for when the Premier Li speaks today is, I think, his message to the world. I think he's always indicated that China will open its doors to foreign businesses. And I wonder for you, do you actually feel an improvement in the environment for a foreign business? Are you finding difficulties in government bids, for example?
No, I mean, look, we've been here for so long. We're part of the ecosystem here. We have a World Economic Forum lighthouse factory in Shanghai that we're really proud of. Our innovation center is going in there. So we have steadily been working with customers over the decades, and that hasn't changed. I think what's going to be really important is that the innovation that we can bring in coordination here in China is going to be something that's going to be very important for this market.
What are some of the geopolitical headwinds that you see? Because, there has been the Biopharma Act. There are also, U.S. government senators sort of pushing for more decoupling. How do you protect yourself against that?
We just focus on our strategy as we've been doing over 4 decades. We focus on our tools and we focus on our customers, right? Making sure we have the right service. One of the things I heard from many customers here this week is what's really important is to have the service and productivity in the labs. You can have these instruments in labs, but if they're not up and running and not productive, then it doesn't really matter. So continuing with that strong customer connection that we build, strong customer relationships, I think it proves that it's going to be very beneficial.
And what's your growth outlook for the second half of this year?
Yeah, so we laid it out. So we have a steady growth for the second half. And we're very pleased with it. And I will say that I'm really glad that after the last 2 years of transformation, we've put in a really strong foundation. We're kind of unique in our space is that we have one sales team, we have one service team, and now we have a CTO working on our innovation and coordinating on it. So we're looking for steady growth in the second half.
Can you share more about your CapEx spending?
Yeah, so CapEx, we look at CapEx broadly across different areas. Now we're looking at some CapEx in Asia currently that hopefully you'll see some announcements from in the next while, but also CapEx in Europe and CapEx in the US. So very balanced, I would say, capital allocation.
And as you invest in this new innovation center in Shanghai, could you share, is it going to be mainly for the Chinese market or is it going to export from there to the rest of the world?
That's a fantastic question, right? So the reason why we're in Shanghai is because of the incredible, I would say, evolution of automation and physical AI, etc., but particularly automation. And we believe that we're in China for China, so we can manufacturing in China for all our product lines. But the innovation center is going to be for China, but also we think it's going to be influential for the rest of the world. So those programs will be global.
All right, thank you so much. Fantastic conversation there, Padraig McDonnell. That is the president and CEO of Agilent. Haidi.
Our Bloomberg China correspondent Min Lo there with that great conversation. We do have more of these chats coming up from the World Economic Forum Summer Davos in Dalian. Over the next hour, we'll be speaking with CATL's Chief Manufacturing Officer, explaining how software-defined vehicles are transforming the auto sector. Later on, conversations with McKinsey and an advisor to China's central bank, as well as the AI company Tuya Smart. This is Bloomberg.
Take a look at how Korean assets are trading right now. We see a little bit of a rebound from yesterday's plunge, especially in Samsung Electronics, that's jumping now almost 10%. We have now seen news from Yonhap News, the local media, saying that Samsung Electronics could soon be embarking on a share buyback worth nearly 90 trillion won. This is in order to pay for the special management performance bonuses in treasury stock. So Yonhap now reporting to Samsung is reportedly preparing for that additional share buyback program to pay for those special management bonuses. Remember, they had a labor dispute which ended with the agreement that Samsung chip employees would get as high as $400,000 as bonuses in order to share the wealth of all this AI boom. Now, former SEC Chairman Gary Gensler says AI leaders and hyperscalers need to generate meaningful revenue and productivity gains to meet current market conditions. Gensler also told us that selling of shares from highly valued IPOs like SpaceX could create a broader downward effect on the market.
I think the overall equity markets, like Alan Greenspan's 1990s equity markets, is funding this big burst of infrastructure build in AI. $750 billion this year, up threefold in just 2 years. And to scale that, that's about 2.5% of our gross domestic product. And so then you have like SpaceX go public and maybe Anthropic and OpenAI. We'll see. Yep. I think that's somewhat of a tell. Google raising $85 billion. And the markets have to digest this. And then there's valuation questions, at 100, 140 times revenues without earnings. So this will all sort out, but it also might be that 6 months from now we look back, it was fine, but there's an equal and better chance that 6 months from now we look back and we say, as all those venture capitalists and sovereign wealth funds start selling those shares, that you see a downward pressure on not just SpaceX, but the whole market.
You're up there at MIT, Gary, and as I understand, there's some pretty good engineers and computer geeks up there as well. What is kind of your understanding? What's the understanding up there at MIT just about AI today? Because initially, we in the marketplace, we just said, let's just buy the chips. But there's more to it than that. Market seems to be trying to discern some winners and losers. How do you guys think about that?
Look, there's thousands of remarkable research scientists and faculty here, so I can speak for just maybe myself. And I think AI is the most transformative technology of our times, but we've had this before. If you go back over the last 200 years, from canals to the internet to this. And what happens, and Ray Dalio talks about this too, we get an over-enthusiastic financial market support. And then at some point, we build so much infrastructure, we have a reckoning. And I think that's what you learn from history, is that we tend to have reckonings.
Former SEC Chairman Gary Gensler there speaking to Bloomberg's Paul Sweeney. Let's get to the roundup of the top corporate stories that we're tracking. And Goldman Sachs equities traders are said to be on track to generate record revenue of more than $5 billion in the second quarter. Sources say the bank's equities unit has been bolstered by a boom in activity in Asia, fueled by that rise in trading and financing related to AI. Goldman stock traders have also benefited from investor fervor around the SpaceX record IPO. Bloomberg's been told that Sony Group has raised more than $1 billion, from a bond offering, marking its return to the US market after nearly 3 decades. Our source says the debt's expected to be rated A2 by Moody's, A+ by S&P. A filing says the proceeds will be used for general corporate purposes. Alibaba has sued the US Department of Defense, seeking to be removed from a blacklist that identifies the company as a supporter of the Chinese military. The e-commerce giant argues that it was added to the list without substantial evidence, violating due constitutional process. The US this month accused Alibaba, Baidu, BYD and other Chinese companies of aiding the PLA. More ahead here on the Asia Trade. This is Bloomberg.
Take a look at how futures are trading. We're seeing a little bit of upside on S&P E-mini futures. This, of course, after we saw a huge sell-off in the overnight session. It was all about tech, the AI trade being now tested, the biggest test in about a few months. We had the Philadelphia Semiconductor Index losing about 8%. All of this ahead of Micron results. So that's what we'll be watching very closely, as the Bloomberg Dollar Index now trading steady, but this after rising to the highest level since November of 2025. Of course, we are now seeing that really rotation towards some havens. We had also seen treasuries continuing to gain ground at the moment. Of course, PCE, the Fed's preferred gauge of inflation, will be also the big driver this week. So do watch out for that. Take a look at how Asian trading is getting underway. It's very early in the session, but we're seeing a little bit more upside and optimism in risk assets, with the Kospi now rebounding after that 10% loss in the previous session. We do have some of the big names like SK Hynix, not to mention Samsung gaining ground. There are media reports in South Korea about Samsung's a potential share buyback in order to pay for bonuses. The Nikkei still down for a second consecutive session. Nothing much happening with the ASX 200. Of course, we continue to watch the price of oil, Haidi, given the negotiations around Iran.
Well, Shery, China's crackdown is something that we're watching when it comes to the pressure on capital outflows. It's also rattling Hong Kong's status as the world's top offshore wealth hub. Super-rich clients exploring ways to move assets under tighter controls. Bloomberg's Trista Xinyi joins us now for more on today's big take. So what are the steps that we've seen from Beijing when it comes to curbing capital outflows, and how is that playing out when it comes to ultra-high net worth in Hong Kong?
So the new measures actually include about $330 million in penalty imposed on 3 prominent brokerage that often used by mainland Chinese to invest offshore. And, regulators also impose stricter controls for banks and correctly ramp up pressure on the country's richest and the trust vehicle they use to hold overseas assets. And they are even made it more cumbersome for some Chinese firms to list in Hong Kong, actually threatening to slow one of the world's hottest IPO markets. So we see that the impact of this crackdown actually happened in Hong Kong, because Hong Kong relied heavily on mainland Chinese money, actually. So the surge of, Chinese money has been so great that Hong Kong recently overtook Switzerland as the world's biggest offshore wealth hub. So now we're seeing this new control on capital outflow, slowing that kind of money flow, can threatening everything, from luxury spending to IPO activity in what could become the world's largest offshore wealth center in Hong Kong. But beyond, we need to remember that it might also have impact beyond Hong Kong, because, Chinese wealth is deeply embedded worldwide, from the family offices in New York to land in Australia and also condos in Vancouver. So the tighter controls may shift, the investment patterns and pull demand in lots of different markets.
So how are wealthy Chinese individuals then responding to these tighter controls?
Well, many are definitely getting nervous and exploring some alternatives if they can. We heard from sources that some are asking for a second tax residence and also even second passports if they can. And for some, they are moving access to places, like Europe and the US. We heard from sources that some clients are opening accounts in Switzerland and the US, of course. And for some, they are reconsidering the long-standing offshore structures. They are now under heavier scrutiny. So a lot of people are moving and trying to plan ahead right now.
In terms of individuals, what are we seeing as some of the strategies that they could employ?
Yeah, as I mentioned earlier, I think seeking a second residency, tax residency, is a lot of people are thinking right now, and that includes, getting a permanent residence in Hong Kong. That's the most easier ways for a lot of people to do that, but it might take 7 years until you get that. And I think a lot of them are also, thinking about getting a second passport in other countries. But a lot of other things they're doing is trying to just move money away from Hong Kong and trying to book those access in a different market. So they're trying to doing a lot of that for themselves.
Bloomberg reporter Trista Sinilo there with that big take. We'll take a look at how we're setting up. We're just a few minutes away from the top of the hour. At the bottom of the hour, we'll see the start of trading across some of these markets across Greater China. But some upside when it comes to Hang Seng futures there at the moment. Taiwan looking like we'll get a bit of a whacking from this continued sell-off in the AI and tech space. We, of course, saw the Korea-driven sell-off passing through to overnight, but a little bit of recovery happening, particularly when it comes to that broader MSCI Asia-Pacific index up about 0.8%. Australia also doing okay at the moment as well. A50 China futures seeing upside of 0.5%, but still these renewed concerns that the AI-driven equity rally may have run too far will not be far from investors' minds at the moment when it comes to some of that volatility that we might continue to expect. We did see broadly the Asia-Pacific index seeing a slump of 3.6% on Tuesday. That was the biggest loss that we've seen since early March. The Kospi, of course, bearing the brunt of that, but we are seeing a bit more of a recovery picture today. US equity futures also edging a little bit higher. Well, that is it for the Asia trade. Our markets coverage continues. We're heading into the start of trading in Hong Kong, Shanghai and Shenzhen with the China Show next. This is Bloomberg.